Philip Weiss says Noble is taking advantage of bad PR for the industry and beaten up stock prices. He has a buy rating on Noble and a target price of $55. He owns shares in the company as well. He is joining us now from Baltimore, where he is a senior energy analyst at Argus Research. Phil, always glad to have you on with us. You say there is not anyone out there who thinks that deepwater drilling activity will stop even after the BP disaster in the Gulf. Is that right? The fundamentals still in line?
That's correct, because we as a country need to be able to supply oil, and the Gulf is such an important source of oil.
What about crippling, Phil, or at least restrictive regulation, though, for the industry going forward?
I do expect regulations to become tighter. I do expect costs to go up, but I don't expect activity to stop.
Now, what if the moratorium, Phil, in the Gulf lasts beyond 6 months? Would that change your view of Noble or any of the other drillers?
I don't think so, because I think that there are other locations around the world that Noble's deepwater rigs that are suited for the Gulf could move. I think it would be more damaging for the Gulf if the moratorium extended too long, because some rigs could move away and go to some of those other locations.
I have to do all the what-ifs here, Phil. I mean, what if BP takes longer to clean up than anybody estimates?
Again, that would still keep activity in the Gulf down, but there's places like West Africa and Brazil, Southeast Asia are all places that rigs can go. It's just that it would be a while till they would come back, because you're not going to move them for just a short period of time. So,
Phil, you point out, as far as Noble's purchase yesterday of FDR Holdings, that the company could see immediate gains, you say, to cash flow earnings by 2011. Does Noble keep going? I mean, all of these drilling stocks have gotten so beaten up. Are there other targets out there that Noble is looking to pick up, do you think, or any other competitor?
On the conference call that Noble held yesterday, they said that they would be interested in acquiring other assets. There are some rigs still being built on spec, meaning that they don't have contracts. And when you have a financially strong company like Noble and you have speculative new builds, that's always a situation where that financially strong company can step in and take advantage of the situation, especially when somebody that doesn't have a lot of capital starts to get nervous. So
what kinds of companies, what potential acquisitions could you see, Phil? I'm not saying to name the ones that will happen, but the ones that would make sense to you.
I think that they're going to be more on the small scale. So just like FDR is a private company, I think it would be more along those lines. I don't really think of a good fit for Noble on the larger scale.
Noble with Shell as well, as you pointed out, inking this 10-year agreement to ultra-deepwater drill ships, so it puts Shell in focus. Shell and Exxon, I guess, the only ones who are going to get partners these days. Is that right?
Well, Chevron would be another one, but I think BP certainly would have a tough time. Noble highlighted their relationship with Shell and liking to work with them, and this just strengthens that relationship.
All right, Philip Weiss, thank you very much, joining us from Baltimore. He's a senior energy analyst with Argus Research.